Welcome to NASDAQ Trade Talks. I'm Jill Malandrino, global markets reporter at NASDAQ. There are now 6 cannabis ETFs in the United States. Joining me to discuss which one is outperforming is Dan Ahrens, AdvisorShares Chief Operating Officer and Portfolio Manager of AdvisorShares Pure Cannabis ETF and AdvisorShares Vice ETF. Dan, welcome back to Trade Talks.
Thanks, Jill.
First, let's talk about the cannabis market in the US and Canada before drilling down into the ETFs. Do you expect to see growth in those markets?
Absolutely, especially on the United States side of the border. Sales have been up. Everybody's expecting additional states to approve either medical or recreational marijuana use in November. And everybody's in pretty good agreement that at a federal level, we're going to see some type of cannabis relief. No one's quite sure what it's going to look like yet. We don't think full federal legalization, but supporting banking, supporting the States Act. All it means is additional cannabis coming online in places that doesn't exist right now. That's a huge upside opportunity.
Any impact to the market as a result of COVID-19?
Well, cannabis stocks, like everything else, fell when COVID hit and hit bottoms back in March. But with cannabis in particular, dispensaries, whether in Canada or the United States, were quickly deemed essential business, allowed to stay in business. And we quickly saw sales spiking. People thought it might have been hoarding, much like with toilet paper or Clorox, but the sales sustained. Sales stayed up, and cannabis, marijuana sales of all forms have been quite solid throughout COVID and continuing since.
Out of the 6 ETFs, which is the one that is outperforming the most and why?
Well, AdvisorShares Pure Cannabis ETF, our fund YOLO, is outperforming the others. I firmly believe it's outperforming due to 2 things. Active management, our security selection. In an area like cannabis, you don't want to own all the category stocks. And some of the largest cap stocks, especially in Canada, are among the worst performers. So in this area, active management is extremely important. We're doing a good job, we believe, in security selection. The other thing is US exposure. The United States market is more than 10 times that of Canada. A lot of those other competitor funds, I think they should rename them tobacco and Canadian cannabis funds. We don't own tobacco, we don't own alcohol. It's a cannabis-centric fund, and we have more US exposure than any of the others. In particular, we have exposure to what's called the MSOs, multi-state operators. Those are the companies actually growing, cultivating, selling marijuana in states where it's legal. We have exposure to those companies. Other cannabis-focused ETFs don't.
Dan, it's really interesting through the course of my coverage over the past 5 to 6 months, and with ETFs becoming so much more thematic, the role of active management seems to come up more and more as the industries continue to get more specialized. So even outside of cannabis, I feel like that's a trend within the ETF space right now regarding active management. What are your thoughts around that?
I really think so. AdvisorShares, we're big proponents of active management, and we are proponents of transparency. People can look at our holdings. We're proud of our holdings. When it comes to a large cap growth fund, people can debate that all day long. Are you going to be better in an index, better in active management? But when it comes to a particular theme, something like cannabis or up and coming areas of technology, when there's an area that can be volatile and where security selection can really make a material difference, active management, good active management, should be able to outperform. I believe it becomes more important.
All right, Dan, great to have you with us as always. Thanks for joining me on Trade Talks.
Thanks again, Jill.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at NASDAQ.